Hi, everyone. First of all, again, thank you to Katya, Capital on Stage, HFN, Karin. I want to correct. I'm from BRM Group, not from BRM Capital. It's a different. BRM Capital no more exists. As I'm the partner that in charge of the high-tech investments in BRM. BRM is a private fund. So we don't have LPs. We invest our own money, and less worries. Okay, that's, I think, something unique for us. What's a private fund? It's quite hard to explain, but it's something in between a VC and a super angel. So we try to take the benefits of being a super angel because it's private, and from a VC, all the good things that also the VCs have. I would say that we call ourselves a fund and not an angel because our investment strategy is much more, I would say, close to what the VCs are looking for. So we look for great teams. We look for breakthrough technologies in billion-dollar markets, which is something that you will hear from all VCs, and we're looking for the big companies that can that has great potential. A little bit about BRM. So BRM started in the late 80s. They started as an antivirus company. It was a startup. They didn't get any investment back then because there was no VCs, and they basically had one of the first antiviruses, which was then sold to Symantec. That's how they got their first money. Then they decided to get into the investment side, and they opened an incubator in Jerusalem in the 90s. Their first investment was $500,000 for 50% of Checkpoint, and they did. It was quite good investment. We did more than 1,000x on the money. And in the first 4 years, they really were part of Checkpoint. Nir, my brother, was also the chairman, and they also had people from BRM helping them develop the product. They also invested in many other companies in the 90s. Backweb was a very successful company, which we did also an IPO. And then in 2000, they decided to climb up the value chain. And they opened a VC, which is BRM Capital. It was a $150 million company, a VC. And then in 2008, they decided to climb up the value chain and become private again. So currently, it's a private fund. And let's talk a little bit about our strategy. So we invest usually $1.5 to $3 million as first investment. Which means it can be in early stage and A round. But because we're private, we can do many things. So like we invested $30 million pre-IPO in MediaMind, and we also led rounds of B rounds. We led a 12 million and a 10 million round. So we are very diversified. We can do many things. But as I said, our focus is on 1.5 to 3 million. Okay? We usually invest in the high-tech sector, in internet, mobile, security, SaaS, fintech, and so on. In the past 2 years, we also started to invest in medical devices. So we have another partner called Alon Maor. Alon is investing in medical devices, so if someone is here, you should know. And usually, I would say that we are very hands-on. I meet our CEOs on a regular basis. We really know what's happening in our companies, and we really try to help as much as we can. This is why we decided to invest only 1.5 to 3 million, because our time is limited. And this is why we really do cherry picking on the companies that we invest in. We invest usually in 2 to 3 companies a year. Okay? That's the new investments. Now, we are upside oriented and looking for alignment of interest. And here's some of the things that we found out in the last 20 years that when we were looking at our term sheets, and we saw that we almost don't use many of the things in the term sheets. And so we had really big arguments with our lawyers what to take off. And what we came out is with a very light term sheets. I give you some couple of examples. One is veto rights. So we have only 5 veto rights, which are very basic ones. No management veto rights. The second thing is anti-dilution. So we ask for no anti-dilution. Simple as that. And liquidation preference, I think it's the most important one. We ask for non-participating liquidation preference, which means that basically when an exit is come, we get pro rata from the first dollar like everyone else and the entrepreneurs. It's very good for entrepreneurs, but we found out that it's also very good for us because the starting point for your next round will be the term sheet you had last round. And when you are upside oriented, you really want to be very light because the small amount of money, a couple of millions that we invested now, will be much more aligned with the founders than the 40 million or 50 million that will come later on. So this is our strategy. It's very light. We are very professional in what we do. Come to us. Just to summarize, private fund, no investors, long-term investors. We are in the high-tech sector. Come to us. We'll be happy to meet you anytime. Thank you.